Yo, welcome back to Bootcamp episode 10. Sorry for the delays. I got a little bit sick and it did not sound good. I've already made this video fucking twice at this point. Did not feel well. I apologize for the delays. I think the last time I uploaded was like 10 days ago or 9 days ago or some shit. I meant to do 3 drops since then, but again, I got sick. I don't know what the fuck it was, bro. I was just out on my ass. But hopefully you guys have been doing well. The bootcamp's been performing really well. There's been a lot of good comments. You guys told me to reduce the size of my camera. I reduced the size of my camera. Y'all don't like my pretty face. It's whatever. But 2 announcements before we get started today. Today we are going to be talking about accumulation ranges, PO3, how to trade it, how to not trade it, what to wait for, all that good stuff. 2 announcements. First announcement, wait, what the fuck was it? Oh, yeah. Wait, what the fuck was the first announcement? Maybe I only had 1 announcement. Yeah, okay, I'm fucking tripping balls. I have a surprise coming very soon. I'm actually going to my hometown tonight. I'm leaving tonight to go back to my hometown. I'm surprising my mom with a little bit of a something. You guys will see more information on that to come. Very, very excited, very blessed. Second update is I will be officially, a lot of you guys are going to really like this one, I'm officially going to be daily live streaming again, full-time like I did before, starting May 1st. So when turn of the month, end of this month, I'm going to be starting live streaming again full-time, just like I did before, just like I had been doing for 2 years, back full-time. The reason why, again, if you weren't here, I took time off is I was doing really, really well, and I wanted to be able to just kind of prioritize my own bag for a little while. I've been making money for people for 2 years at this point, a year consistently of live trading every day. It was getting to a point where I was just getting tired and people weren't appreciating what I was doing. And I also didn't have enough long-form content or time to make long-form content, but we're having a little bit of a change now, so I'm going to be coming back to the live streaming scene once the bootcamp is finished, which will be finished by May 1st. So my deadline to finish this whole series will be May 1st. I'll be live trading on May 1st every day. Maybe not as frequently, not as like all day or as long as I do, but I will be, I'll be doing the AM session streams every single day. Maybe not PM if I'm feeling it or whatever, but super excited to bring that back. I know you guys have been asking where have I been, where's my streams. To be honest with you guys, I needed a break. I needed to hop off for a bit. I've been doing the same thing every day for a year and a half. You get tired of it, but I miss it. I want to come back. And I've been really just making a shit ton of money, boys. I'll show you real quick. This was today's purse. Actually, yesterday's purse. I did not trade today. I've been packing up all my shit to go back to my hometown. I'll show you how much money I made on, these are my fresh accounts from Top Step. I have 4 accounts or 5 accounts, well, technically 5, but 4 accounts at Lucid that I traded Asia on, and then these are my accounts. I'll show you. I'm gonna get max payouts on all 3 of these accounts. I had 4, but then I accidentally held a trade through news, and it got absolutely fucking annihilated. Fresh accounts, they just kind of get cooked on. This is one of my accounts. See if it'll focus in there. A little 4K balance on it. Come on, dude. Got this nice ass camera, and it just won't even. There you go. 4K balance in this account. This is all from one trade, literally one trade. Copied 3.7 on this one. Come on there. Hello. You got it. Oh, maybe it's because it's tracking me. Oh, that's what it is. 3.7 on that account, and then 4.2 on this one. So I had a 12K day yesterday. She was fucking lit. Come on. There you go. 4.2, and this is literally from one trade. So just to show you that this shit is real, bro. This shit takes time. Obviously, I did not come here in one day. I did not get to this point in one day. It takes time to master this skill, especially if you're new to trading. My strategies can be a little bit overwhelming, a little bit much, but they are profitable and more profitable than any of the stuff that you've seen before. So very good day for me yesterday. Again, I did not trade today. I've been packing up most of my stuff. I didn't even see what was happening today. I've been trying to fix my sleep schedule. I've been doing like these crazy long nights, trying to buy some crazy ass shit right now, trying to buy a house. Usually when I stream, I get to update you guys on all this kind of shit, but I'm actually in the process of trying to buy a house, and so it's a little bit taxing, and I gotta make sure that everything's straight. So without further ado, live streaming again, coming back on May 1st. So just let me get through this month. Let me finish up the boot camp, and then we'll go ahead and bring that back every single day. Kick.com, MarketX Macre, link will be in the bio and the description. Join the Discord, get the indicator, everything is there. Let's get into it. So today's concept I want to talk to you guys about is the accumulations that occur with pointers. So oftentimes when we're looking at trading, everyone focuses on the winners, right? Which is super important. Like winning a trade is incredibly important. By design, by how my model works, we win a lot of trades. Like our win rate is incredibly high. People that are new to a strategy often first ask what the win rate is. And I just feel like that's such a bad approach to it, because you're just kind of letting your brain just like disregard anything that isn't over or under a certain number. I think the best way to really understand mech is to see, and that's why I live traded for so long, is to literally see it every single day. That's why I was so confident live streaming every day, is because I just win. Like that's just the reality of it. And now that I'm not doing that anymore, and my audience has grown, it's like it's hard to really see it when I'm not backtesting in front of you, when I'm not live trading in front of you. So you kind of have to trust it. So we have backtesting videos coming up very, very soon. I think we're only like 3 or 4 episodes out from finishing up like content stuff, and then we have a lot of like specific details to work through. But backtesting soon to come. But everyone focuses on the wins. But part of being a good trader is also knowing how to avoid accumulations, predict accumulating days, predict like very rangy days. Obviously, not take losses, reduce the size of your losses, exit out of consolidations very, very quickly. Those are important. Just as the size of your alpha, you got to limit your decay as well. So with that being said, PO3 is a phrase that we use when we essentially structurally see 3 or more pointers that validate FFEGs. The logic is if FFEGs represent supply and demand, as we've kind of gone over, then if you have pointers, which are the reaction to a FFEG to take you to the next FFEG, and we assume rule number 1 is true. If you remember from our pointer video, we talked about this, which is that every implied move starts and ends with a pointer FFEG. If we know this to be true, well then what we're saying is we have opposite sides of FFEGs and pointers validating those FFEGs on equally, right? Meaning the buy supply is creating the necessary volume to create a pointer to move to the next FFEG, and the sell supply is creating enough volume from their pointer to move to the next FFEG, which is an accumulation, right? An accumulation represents an equivalence between the buyers and the sellers and their pressure, right? Oftentimes people, when we talked about this in the beginning, I think episode 1 or 2, oftentimes people think that an accumulation is lack of volume. It's not necessarily the case that that's true. Sometimes it's more voluminous than the actual big, expansionary events that we see. Oftentimes the accumulation is going to have way more volume, because if you're going to have, it's like the same contested range, people are trying to build and build and build and build, and then it just requires a little bit of volume transfer from one side to the other to spark the big move, right? We talked about total float and rate of change, right? Basically, with a consolidation, the total floats are relatively equivalent, the volumes are equivalent, and they're moving between both sides equivalently. That'll end when the total float has a small change, which then sponsors a rate of change, meaning the people moving from one side to the other starts to increase, and you build up more total float on the other side, and then you have those big runs. So oftentimes people talk about the accumulation, manipulation, displacement type models, and that's exactly what every model is. I never understood why people try to I trade AMD or I trade, no, like everyone is trading the exact same market. It's just how you're viewing it. But yeah, so the way we look at accumulations is they can happen anywhere in price. Now we're gonna have a couple of ways to get ahead of that, but they can happen anywhere in price. We're not trying to predict an accumulation. We're gonna have ways to trim and reduce our contract size, estimate if we are going to accumulate. We're going to assume it would happen here, not as a means to get out, but as a means to reduce our size, so that if we do accumulate, we can break even or even exit in profit. That's why, as weird as it is to say, when people lose money with my model, I often always will go to you didn't know something opposed to the model was wrong. There's been like 1 or 2 instances way back in the beginning, and that's how I built the model, that where it's like, okay, well, this is wrong, and then I built rules for it. And PO3 was one of them, right? How do we deal with manipulation on the buy side? We dump down to the lows, but there's an equivalent amount of volume at the lows, and we pull back up immediately. I always say, what's the point of taking a short if the next candle after a 100-point dump is a 100-point retrace? What's the point, right? The goal is to figure out where is that volume going to come in from, and what is it going to look like, and how can we avoid, the mental toll, because you don't think about it, but if you're shown 100 points of profit and then immediately a 100-point reversal, there's a problem there, right? I would much rather you take the trade. I would much rather you not take the trade at all, but I'd much rather you take the trade, exit with 30 points profit, and none of the rest go break even, none of us lose money, assuming the consolidation, right? And then maybe take the inversion. You can, for the most part, not just with, we're not going to really focus on context today, but with context and just a little bit of thinking, you can avoid most bad price action. Generally speaking, you can avoid chop, you can kind of see through the chop. We'll talk about that with context management, not today. But you can see through most of that shit. Like 90% of pointers that fail, you can literally anticipate. So there's a small subsection that are a little bit harder, and that just requires more time and skill. So what is a PO3? A PO3 is when, like I said, you have 3 or more pointers validating FFEGs. Oftentimes, some characteristics you'll see of pointers is you'll see, first of all, let's identify a really, really clear accumulation. Nothing like that was moving up or down, just a very clear, like really, really picture perfect. I mean, this is all really good, actually. I want to find nothing that's in like an Asia session though, because it's gonna be a little bit different. Yeah, it's a little bit, volume is there. We're gonna look for New York session only. Really clean. Like this is a really good example, but I don't want it going anywhere. I just want it to be stuck where it is. This is, come on. This could be good actually. This is a decent example. We'll look at this range, okay? This is the accumulation we're gonna be looking at. Price delivered pretty much nowhere over this period of time. We did move about 60, 70 points, but didn't really end up going anywhere. From the start of the session, from the close of the session, price didn't move that far, right? Until later in the PM session, we didn't really move anywhere. We can use this one. We'll find another example too. We'll use this one to talk about. We're just gonna outline this, and then we're gonna come to another session. Hopefully we have another one nearby that looks good. Oh, this is good too. This is actually pretty solid. We can use all this shit. We can use basically all of this. And let's do one more. We'll do, holy, okay, this is perfect too. Literally, this is fantastic. This is fantastic too. Boom. Okay, we'll start with whatever we have all the way on the right first. I don't know where that was. Okay, right here. So wait, no, I think we had another one, didn't we? No, maybe not. All right, so a PO3, like I said, is defined by those 3 or more pointers, but we can kind of anticipate when that's going to happen. We can avoid that happening, but ultimately, if you execute on every single pointer that forms during the creation of an accumulation, you're probably going to lose money. There's just no way you can approach it and not lose money, or at least you can break even for the most part. That's why a lot of the losing money on the formation of a PO3 or the formation of an accumulation can be avoided at the beginning of the accumulation. How we start to accumulate is going to be very, very important. But once we have that accumulation, we have to stick to the rules. So what are the rules for dealing with accumulations in price? Well, basically, when you see 3 or more pointers, your brain goes, we are now in an accumulation. And now you have to wait for one main condition. Basically, the equity that is accumulating needs to take a high or low not associated with the accumulation range. This is kind of a really bad example, but it is good in some ways. Do we see price ever sustaining a move to the upside after this low being swept here? Do we see any sustained momentum to the upside when this low associated with the chop gets taken? When we take this low here, do we see a sustained move to the upside? We see a pointer. There was probably an FFEG here, right? So this is our entry condition logic, but was it sustained? Well, the answer is no. And so when would our exit be? Well, hopefully somewhere in here, but chances are if it's a PO3, if it's an accumulation and it's using these FFEGs, you can clearly see them. We'll go back in time so you can, but you can kind of visualize them when you see price respecting something. You can always assume that there's like some type of FFEG there, or an IFFEG, for example. So when we're looking at like this chop, let's turn off IFFEGs just so we can teach this, make it a little bit easier to see. I know I've had a lot of complaints about that. There we go. So when we're looking at this, we would want to hope that obviously the pointer exit would be somewhere in here, but let's just assume that we're just taking without any, logic of PO3s. We're trying to clean up the model right now. Let's just assume that we don't know anything I'm teaching you right now. And we're using this FFEG, we're taking this pointer here, we're just forgetting about PO3. Well, let's see where our exit would be on this entry. Well, let's take a look. Here's your FFEG, we see a move to the downside. When was there a chance to exit on this using pointers? Well, if you look, there really wasn't an entry. Even if you go down or an exit, it wasn't really a good exit until you get down to like right in here, right? So you literally retrace back to your entry immediately, like a little bit of points in profit. Now, what could have been done here if you did take this is obviously you could have done one of those trims like I was talking about from before. We're going to talk about that in the next episode. Or you're doing one of those trims and then reducing your size, your additive trims, we'll talk about the next episode, and then your exit would be here. So you might have made a little bit more money, but at the most clear example of it not going anywhere, so what's the point of taking it? So one of two things, right? You take it with that risk management I just mentioned, or you don't take it at all, because what's the point of being teased? This big point spread, right? Oh fuck, what did I just do? The fuck was that? Just opened up Roblox. Whoops. Okay, so what's the point of taking this point spread here, getting shown 100 points, and then you get that 100 point retrace, right? Because ultimately everything in the market comes down to draw and liquidity, right? Where we start, where we end, that's essentially where it comes down to. And during an accumulation, there are equal draws and liquidity. We're being drawn to the high and drawn to the low at an equally strong rate. And so it's just kind of like being teased for nothing. Now, obviously, we're going to be using the untapped rules to be able to do our trimming. You can technically take this, but when that accumulation range builds itself out, it's going to use low time frames to create that pointer for that exit. Notice I had to go to the 2 minute time frame to find an exit for that. And there's probably something in the 1 minute. Yeah, you had to go to a 1 minute time frame to find an exit on that. That's what I mean, right? When we trade 3, 4, 5, and 6 minute pointers, why we use those is because those are built for the biggest markets, right? For the biggest moves. When you have to go down a low time frame to find your entry and find your exit using a pointer, you're going to get to a very micro, like accumulated market, very small range you're trying to trade. Our trades last between 15 minutes to 45 minutes to an hour at most, and so with that information, using a 1 minute doesn't make that much sense. 3 through 6 makes a little bit more sense. So your exit using a 3 through 6 isn't somewhere, 2 through 6 or whatever the fuck isn't until here. You could use that lower time frame if you wanted to. Obviously, the market's able to determine the time frame of the pointer for your exit and the entry just in any implied move, but when we're looking at this, it doesn't go anywhere, right? We can see in hindsight that it didn't go anywhere. So A, you can avoid it, or B, you can do risk management. So the rules are really simple, right? If you don't take a high or low between both equities that are PO3ing, not associated with the chop, basically like let's say we move back to our left-hand side, always look to your left-hand side. Are we taking a low not associated with chop? Well, no. Take a look. You see this little gray box right here? You see this little grayed up box? If you go on your indicator, double-click your indicator, scroll down to ECR, right here, and you can turn this off if you want to, you can turn this off if you want to, and you can just turn this on. This will show you old PO3 ranges, areas where we had pointer rule of 3 or more pointers expressed between FFBGs. And you'll see that we are manipulating, see this manipulation event, a low associated with the chop, meaning we don't want to use that manipulated low to trade back into the chop, because trading back into the chop is not good. What you want to do is wait for a low not associated with an accumulation, or basically an important low, a confident low, a high probability low, pair that with an untapped FFBG, pair that with a pointer, and that's going to be a much better condition for trading back into the chop. We can trade a chop when we take a low not associated with the chop. Once we have the confirmation of the chop, which we can kind of identify, at earliest will happen here. There's probably some lower time frame examples, but we're just going to use the 5 minute to make the video easier to understand. We are shown PO3 at this point with the indicator. Again, you can find the pointers if you want to. You can clearly see them: bullish pointer, bearish pointer, bullish pointer. You can use any time frame you want to see this: bullish pointer, bearish pointer, bullish pointer. There's so many pointers in here, but by this point, we can at least guarantee that we've been shown 3 or more pointers after the chop, right? There's not much you can do about that in a lot of cases, but once we've confirmed the chop, right? Once we are in this chop, we are not allowed to trade until we can manipulate a high or low not associated with this chop or any chop, right? We want to take a new low or a new high with an untapped FFEG to sponsor that move. That's going to be what's going to allow you to take manipulations back into the chop. So when we're looking at this and we're looking at this area and price, we don't want to trade. Essentially, we don't want to trade until we can take out this. Well, you can't even see it. I'll just mark it out. We don't want to trade until we can take out this low here, this low here. I'm just going to mark them here for now. This low here, and we don't want to trade until we take out this high. And the same is true for the other equity, right? So you can mark these out for your conditions. This is where you want to set alerts in price, and you just leave until it happens. But technically, we're missing a step here, right? What are we missing? Well, the fact that the market doesn't always have to manipulate off of a low and move higher. We can have continuations, right? When are we allowed to take continuation trades when it comes to a chop? Well, we need to make sure that we can do risk management, because a continuation on a chop could still lead to a chop. Imagine, for example, we get a pointer here, and then there's an untapped FFEG here, and the pointer goes down here, and the next candle is a pointer to the upside. A consolidation is just a bunch of failed pointers. So theoretically, that's something that could happen, right? So what do we do in that situation? Well, you want to, like I say, all bad trades can typically be avoided before you take them. So the only chance you'll ever take a consolidation continuation, meaning a breakout through a consolidation, right, where we're saying that whatever area in the market's run out of total float, and we're able to push through that, and the pointer is the thing that'll create the rate of change. what you want to wait for is risk management. What do I mean by risk management? Well, basically a pointer that allows you to have a guaranteed move. Go back to our rules on pointers. What was one of our rules? It was that a pointer is guaranteed the move to the next set of FFEGs, assuming nothing is in the way, no FFEG, no IFFEG. An untapped will take you to the next untapped. The way I want you to think about the market moving forward is that your untapped FFEGs, I just explained this to someone like this. Your untapped FFEGs are like the external ranges of price, right? This is what's going to determine the overall structure and price. If we get pointers here, we are moving to and drawn toward the next set of untaps. But what can happen is along the way, already used FFEGs, weaker levels can be used to create volume, to create new untapped FFEGs, to create new pointers from. So your FFEGs are kind of like traffic, and your untapped FFEGs are kind of like the barriers of the road, and then FFEGs are going to be like the cars in your way from your destination, right? So we have a goal, but if there's an accident in front of you, let's say for example, here's your car, here's your pointer, we're trying to get to our exit, but then there's an accident in front of you, here's your FFEG, okay? And then that accident, causes a multi-car pileup, and they have to reroute all the people to a different area. Well, then we may eventually come back to this range, but not until we come back and retest the untapped FFEG. Well, it's already tapped at this point, but a new one, for example, and then you kind of come back to retest, right? So that's the idea. FFEGs can create the traffic away from a range. The untapped FFEGs define the distance of the range, how far we could be, what our targets are essentially. So we don't want to ever really trade this until we get a continuation pointer coming from an untapped FFEG, targeting an untapped FFEG with nothing in the way. Meaning, for example, let's say we have an untapped FFEG here, price comes into it, taps into a pointer, okay? And then there's nothing here, it's just white space. So imagine there's no IFFEGs here, for example. This pointer, if it's leveled off here, for example, we know that what do we know about pointers? We know that every implied move starts and ends with a pointer reacting to an FFEG. Well, let's assume that this is an untapped FFEG, and there's nothing else here. At minimum, before the price can reverse, it has to at least go here. The reason why we want to wait for a continuation that can guarantee this principle, this is what we call the additive trim. This is a concept we're going to talk about in the next video. I might even just film it now, right after this video. But basically, what this does is guarantees you this move, and so you can make money by sizing in extra contracts on this transition. Okay, when you do this, this buffer that you create from that transition acts as a means to break even if the next candle is a pointer. Because the next candle comes up here and it's a pointer, well then the money from this transition, from this untapped FFEG, right, the money from that transition will cover the losing cost of essentially the consolidation still maintaining itself. Because the consolidation is going to be built out of failed FFEGs, failed pointers, right? So that's essentially how this is going to work. Let's kind of let this play out a little bit and see if we ever had an opportunity for this. The additive trim idea can get a little bit hard to understand once we really get going here. We got to turn IFFEGs back on here. Okay. Okay, so this is a really unfortunate example of it happening because this is going to probably confuse a lot of you since we haven't talked about additive trims. Matter of fact, you know what? Do I need an episode on additive trims, or can I just explain it now? We'll just explain it now. Fuck it. I'll just explain it now. Okay? An additive trim is basically when you have distance between the FFEG you're on and the FFEG you're targeting, and there's nothing in between. And so what you will do is we'll have a technique for adding extra contracts onto that position to then be trimmed off, additive, trimmed, add contracts to trim. It's going to be our form of a stop loss, right? A lot of stop losses out there, a lot of stop losses that exist out there are fixed static losses. I have a video on my YouTube channel, I think actually, I think it's called, if you want, go watch it. I might even find a way to link it on the YouTube. It's called, I think it's like literally one of the biggest mistakes I see in trading. I think, did I make this? I feel like I made a video about this. Oh yeah. It's called the one mistake everyone makes in trading or some shit. This video right here, there's gonna be a pop-up on the screen somewhere now where I talk about why static stop losses are a really bad idea. But a lot of people have a static stop loss, and the idea is you want to have fixed risk. You want to assume fixed risk so that if the market reverses, you're not cooked. We do the opposite, right? We're going to wait for a guaranteed move, which is something you have to study, but basically is when essentially we can test that a pointer with nothing in between it and the next set of FFEGs is guaranteed to make that move. We add extra contracts onto the trade. So let's say we had taken 10 contracts, we'll take 20. We'll trim those 10 at that low or at that FFEG, as an addition. So our stop loss is kind of inside of our trade and not outside of our trade, if that makes sense. That way we can kind of add on a drawdown, so if the trade does reverse, then we walk away break even essentially. That's how we don't lose trades. It's okay to be wrong about a particular mechanical move, but losing money on it is usually a flaw in how you're executing your contracts. You shouldn't lose money if you're using mech. You shouldn't, unless it's a really volatile move and the pointer spread is really big. Like, let's say, you only caught 30 points of drawdown and then it's like a 60-point pointer or some shit. That's an example where you would obviously lose money, but that's really not anything that the market can control. So what do we see here? Well, this is what we call paused additive trim. A paused additive trim is where we see that price did move to this next set of FFEGs. You see how we moved to the next set of untapped FFEGs? Well, we're coming from that untapped FFEG set, but the problem is, right, is we're stuck on this 1 minute FFEG. So the only thing stopping price from moving from here to here, it's not guaranteed, but the only thing that's stopping it is a complete inversion of this IFFEG. Because think about this IFFEG, right? It's somewhere in that buy-side sweep, off this buy-side sweep to 1 minute, meaning once we have a 1 minute inefficient break on this IFFEG, what's going to happen is it's going to mitigate. When it mitigates, there's nothing there anymore. So once you have that 1 minute inefficient break over the low of the FFEG, which I think it's that green line, let me just make sure. Yeah, so once we have an inefficient break on that, boom, this right here now guarantees the transition to this next set of FFEGs because there's nothing in the way. This IFFEG all the way back here has now been mitigated. It's gone. It's no longer a level that exists in the market anymore. There's nothing holding price back from moving to the next set. And you'll see this is when we get that delivery down to our next set. So this candle right here is guaranteed to move to this next set of FFEGs. This is what we call pause additive trim. So what you would have done here is you would have taken half of your regular size on the pointer, right? We're going to talk about the techniques of this later on. We have to go back to PO3s. I just want to briefly explain additive trims. I'll make a little bit more of a longer explanation how we will execute this and like back testing it. But when we're looking at this pointer right here, okay, you'll take half of your size here and then you add on that extra risk management on that inefficient break. Or alternatively, if this 1 minute held down here, right, this is a 5 minute swept pointer, you would use the low of the 5 minute swept pointer to de-risk your trade on half position. So if we start moving up using the swept pointer logic, go watch my video on swept pointer. It's on my YouTube channel. It's in the bootcamp. We are essentially validating that last, inefficiency in that buy side leg, that bullish leg. It's going to retrace that swept pointer move higher, right? And so we can de-risk on that move. But in this case, we don't have that. We have an inefficient break. So then we can add our extra contracts in here on this 1 minute inefficient break with a limit order down here. So this money in here is guaranteed to be made. So essentially we are capturing like a free 20 points of drawdown, free stop loss. Throw a mini on that. Throw contracts on that so that when you're in these trades, you have more drawdown to work with. My biggest days come from the first day of an XFA because all it takes is one winning trade and I have $2,000 of drawdown that they give me and plus all the drawdown I made on that trade. So I do most of my trading on an XFA within the first 2 or 3 days trading it, and then I just go for consistency after that because I don't get paid any more than what they'll pay me, $5K per payout, right? Like last month, I think one of my biggest issues was I didn't have enough allocation, enough firms to make as much money as I could have been making because I'm like, all right, well, I've already maxed out all my accounts today since they can only pay me so much per payout. There's no point in grinding these big ass trades. I'll just take 2 or 3 big ones and then just go for consistency over and over and over and over and I'm fine. Make 5, 10, 15 bands per day and then I'm just 2 or 3 days of that and it's okay, well, I'll just go for consistency until I get fucking kicked off these accounts, right? So once we make this transition, this move right here, see how it immediately teleports that 1 minute inefficient breaks where it would pause and it moved right to the level of the FFEG? That was a guaranteed move. That transition allows us to make money and then reduce our positioning. So when we're in a consolidation type trade, you want to make sure you're optimizing your entry and you're taking continuations that can create that opportunity. Don't jump at opportunities that are really hard to create additive trims. So for example, imagine you have 7 billion FFEGs right here, and then you get a pointer that looks like this and it's a swept pointer. Well, dude, you don't need to test the swept pointer because you have a trillion FFEGs in here. Just wait for the fucking swept pointer to come in here, right? That's not a pointer. Just wait for the swept pointer to come somewhere in here, okay? And then test it there because the FFEG is what's going to control the range. Don't test a swept pointer in the depths of a fucking hell of FFEGs like this because What is stopping price from moving to the next set of FFEGs? Well, it's not the pointer. It's the time frame of the FFEG you're on. So just because we get a 2 minute, 3 minute, 4 minute inversion, that 5 minute doesn't break, it'll retrace, right? So in this case, this was a lot higher of a probability of moving because we only had one FFEG to invert. We had one FFEG to flip, like the one last domino before the whole thing comes together. So that additive trim, this is the only type of continuation you'd want to take in here. And the reason why doesn't mean that the continuation's going to start from this. It could, but it's the best way to get in on the continuation if the consolidation will end in a risk-free way. Because now we have 20 points of stop loss, so that if we get a pointer to break even on, we either walk away with profit or we walk away break even. You see my point? So we'll see how this kind of would have played out and how we would have been a lot safer. It doesn't look like we had an exit. And this was actually, where was this fucking example when I was teaching pointer range of control? Where was this example when I was teaching pointer range control? Well, here's an example of pointer range control. Here's the pointer of entry, right? And you can see literally right off the cut, look at that. We never got a pointer after this. No PO3 box showed up. We come back into the same pointer range and we use it to manipulate off of. This is a perfect example of getting to add more context. So this is beautiful because guys, look, think, right? No pointer after our entry, so no exit, right? We take those additive trims, we come back in, we do it again. We add our extra contracts in here, we come back in, we do it again, bro. We size in some more. It's fucking beautiful. And then we see that this was beautiful short. I didn't even realize this. I wasn't even looking at that. I wasn't even fucking looking at this. So that was a beautiful short. We'll see if we had an exit in there at some point. Somewhere at these lows maybe. Between both equities. I think just now. Literally just now. Just now we had one. Okay. So it's just kind of showing you what I mean, right? You want to wait to take a continuation. Oh, I removed all my drawings. Oh, fuck, I forgot about that. I have those other consolidations. You want to wait to take a continuation that can guarantee you a little bit of risk management so that if it does fall flat, you're not in a bad situation. Now let's look for a manipulation style example. Let's turn off IFFEGs. Let's look for a manipulation example where we didn't get a breakout on holy shit. We didn't get a breakout on a consolidation until we took a manipulation not associated with the chop. This crazy consolidation. Again, this is an example of a continuation. You see how price did not take any highs or lows not associated with the chop. This is London, obviously in Asia, but we didn't take any higher lows not associated with it. We didn't move anywhere. When we did move somewhere is when we probably had some type of, take a look here, FFEG pointer, IFFEG, probably some type of additive trim move, and there's your exit, and then probably another re-entry, unless it's a sweat pointer, SMT pointer, whatever. I'm not even really looking at that for example, but still there's continuations to take but no manipulations in this example. So let's go and let's find an example of being able to take a manipulation after the consolidation starts. We're gonna look for New York only moves here. Okay, so we're gonna have to use both equities for this. This might be another continuation example because we kind of chopped there for a minute. We didn't take any new highs or lows unless ES did. I think ES did. No, ES did not. So again, this is just a continuation example. Right here is another continuation example. Still a great model to be in a continuation trade, just not a manipulation from a consolidation. Look for another New York move here. Like I said, I don't plan these videos out, guys. I literally just hop on, record, do what I gotta do. This is the most clear fucking PO3 day you could ever have. Right, and let's kind of talk about this day a little bit because this is one of those days where it's very easy to know when you aren't trading. So basically, if we're looking at like this whole thing is a PO3. This entire range is PO3. There's your start of the day. There's all of it's literally PO3. So our PO3 counter would have started here. That's your PO3 by this candle, probably even before this too. So we're not allowed to take trades until we take highs or lows not associated with the chop. Basically, those lows are those highs up there. And you can use the indicator to kind of turn that on if you want to as well. You can go down here and then you can click show levels. That way you can just kind of set your alerts at the level. You can even go in there, I think set alerts automatically too. I forget how that works. Yeah, so you set alerts here at the highs or there at the lows at whatever, lows exist that you wanted to use. Anything not associated with that range, totally fine to do. And you'll see the price never really went anywhere. There might be, small continuation style trades you can take as long as they have the ability to do risk management on them. But price never really went anywhere, never really took any lower high not associated with the chop. Again, consolidation, continuation. Man, we're getting a lot of good examples. I promise you next video it's going to be manipulation, consolidation trades, just fucking day in, day out. This is a really good example of the still not working. Dude, it's so funny, bro. Every time I want to teach some shit, it's just like never the concepts I need to teach. Okay, well, this is just clearly an example of what I'm talking about, just a really shitty one. Taking a higher low not associated with the chop, still same thing there. This might work. It's not necessarily perfect. It's not necessarily perfect just because it is also a continuation. I want to find a really, really good example of this during New York. Okay, this might be something. Might be another continuation though. Oh, yes, took something here. There we go. Perfect example. So this is basically how we would use an SMT in this case. If you don't know, an SMT is when one equity that you're trading takes a high or low not associated with, or that the other equity may or may not have, or is displaced, and so it's going to draw from liquidity from that. So if you look at this example here, we are clearly chopping in PO3. We clarify that PO3 is somewhere in here. Not going to take any trades till we take a higher low not associated with the chop, so nothing in there. So this low is obviously not associated with the chop, so clearly it's totally fine and valid to take for a manipulation style trade. Then what do we see? We use the same low, and whenever pointers untapped FFEG comes from this low, to then take a trade back in again. And you can kind of see that with the indicator. It'll tell you that there's the SMT there. It'll outline, I think, yeah, right there, there's your SMT. ES took that low. We did not take an NQ. We have basically an untapped FFEG pointer reaction here, I believe. Should happen. Yeah, there's your untapped FFEG. There's your pointer. There's your entry, swept pointer logic, and it's also a pause additive trim right there. That was a pause additive trim. Take a look, guys. If you don't remember, pause additive trim is where you see that FFEG, right? This is a 4-minute. This is a high probability inversion because all you need is a 4-minute break. Take half your contract size on this. Wait for the 4-minute break. When that 4-minute break comes in, take the rest of your size, add the rest of your size in there, limit order at the next FFEG, at the next untapped FFEG, and there you go. There's your additive trim. That's your stop loss in the trade. The stop loss in that trade would give you, I think somewhere in there, 30 points of drawdown just on that trade, not including where the pointer would fall. Free 30 points of drawdown, literally a free stop loss. That's a pretty large stop loss in terms, not really a stop loss, but you know what I mean. Like room to break even on and not lose money. But stop losses, you even lose money on it, so it doesn't even matter. Basically, your break even stop using that principle. So yeah, so this is a really good example of having a clear PO3 and then taking a lower high not associated with that chop. It's an SMT on ES. We take that low, not associated with the chop, and then we get the displacement. And you can see the market state is completely changed now. You see how it's very much expansive. Now, obviously, that's going to change when we take another high or another low, adding new liquidity into the market, right? Moving into those FFEGs, adding that volume to the downside. And then, if we PO3 again, then we would want to wait for continuations that either guarantee the risk management of the additive trim or manipulations that come from highs or lows not associated with the chop. So we don't want to take trades back into the range unless we get that new high or low. We also don't want to take the continuations, like I just said, without having additive trims. Not to mention, PO3s can be kind of speculated on, not predicted. I don't want to say predicted, but you can kind of understand when they'll happen before they happen using swept pointers. You want to look at every PO3 and understand that it's built out of swept pointers. See how we are essentially pointer. It's because we have the FFGs on both sides of the market. We're easily reacting to them and pulling back in and validating and respecting that. So that's why the PO3 works the way it does. You're essentially just equally validating, and then it's built out of weak pointers. Look at what we have in here. We have 1.5 billion swept pointers, swept pointer, swept pointer, swept pointer, swept pointer, swept pointer. Probably a bunch of SMT pointers in here too. I'm only on the 5-minute time frame. It's very rare that you'll see that many swept pointers in an actual live market. They're usually the highs and lows of reversals or in the highs and lows of a consolidation. So oftentimes using a swept pointer, it's either not going to be fun or it's going to be really fun. So it's just your job to understand what are we reacting to create that move. So I think that's everything I need to say about accumulations for now. If we look at this, I wonder if this is a good example of what I'm talking about. Yeah, I mean, that's also another good example. This is a good continuation though, so still it doesn't really apply. This might be something. Did we just look at this? No, we did not look at this. Let's take a look. Same exact deal here, I think. Same exact deal. Let's check ES. I think boom, same exact deal. Same exact deal in this same accumulation, same implied move from that bullish leg, took that bullish leg's low, not associated with the chop, we can take that higher. It's pretty simple, guys. Your job is just to be able to go in there and find the highs and lows associated with the chop as long as they haven't been taken, or if they've been taken, mark them out. That's all you really need to do. So like, If you're in an accumulation, right, wait a couple hours, wait for the next session. Like for example, if like we're coming over here and in the future, you want to know that this is not a high or low you want to take, you can just kind of say like, hey, like PO3 low, right? Go in there and mark that. So when price is manipulating into a level, for example, that might be in the indicator, you're not going to take that same level to take a trade off of, right? It would be kind of retarded, right? So like if we see like this AM low here, well, it's really the same low, but whichever one you want to use, right? You have that set right there. You say, okay, we have that AM low, but it's a PO3 low. I don't want to use that to sponsor any moves, unless, of course, ES is fine. You can do that if you want to. It's just a good annotation rule. Keeps you a little bit faster in the market. See, I'm trying to see if there's any more examples of this. It would be cool if we could get one more. I like to have a lot of examples when I'm teaching. That way there isn't any confusion. Again, this is a really good consolidation continuation right here. Take a look at this consolidation continuation. What's the beefiest part of this leg? Well, these two areas here. What do we have here? 5-minute sweat pointer, probably an FFG here. And yeah, take a look. All we need to do is flip the 3, flip the 4. There's your sweat pointer, super low size, and then you scale in on the rest on a 3 and 4 break. Because in order for this whole leg to fail, you need a 3 and you need a 4 break. So when you have, when you have both of those two things happen, we'll just be on the 4-minute time frame. A 3 and a 4, there it is. There's your extra contracts. Take those extra contracts down to that FFEG set, the untapped FFEG set. I don't know where that is right there. And then those are your extra trims to take. And there is your inversion. And there's your PO3. And so what do we do from here? Well, we can't take a trade until we take a high or low, unless it's a consolidation continuation that doesn't bring us risk management. So we're not going to be trading until we do that. And we didn't really miss much. And then the session ended anyways. This is Asia set. This is the 350 window. Regardless, this is a really bad example of that. But still, we'll do another one. We'll do consolidation continuation. Did I do a video on sweat pointers? I'm old, bro. Holy shit. Did I do a video on sweat pointers? I think I did, didn't I? Pretty sure I did. Yeah, surely I did. Wait, no, I didn't. Oh, I did. Yeah, I totally did. The fuck. Okay, same here, right? Non-PO3 low. Do we see PO3? We do not. Not associated with this low. We take this low. We had chop. We take this low. We sponsor move to the upside. Pretty simple shit, boys. Oops, gonna delete those. Same thing here. Okay, not associated with the chop. No PO3 on the low. Mink, mink. It's pretty simple. And then this is actually pretty clean moves. There's really no PO3. This is a continuation like on a consolidation anyways. Doesn't matter. Yeah, this one sucks. Not manipulating a non-associated low. Just a continuation consolidation. That's all it is. So that's when we do our little risk management move. This is actually really, really clean. This is really, really clean. Take a look. Consolidation at the high. Confirmed here. Manipulate the low. Pointer on the low. Small move. Didn't really go anywhere. Let's take a look at ES. What does that low look like? Oh, fuck. Did I not put it in replay there? Oh, you're kidding me. That was a really good example. Where was it at? Am I smoking that shit? Was it this one? Well, this is still a shitty example. It's perfect. Okay. Did ES is low that it take? Was this associated with PO3? It was associated with PO3. So still, right? Even though this isn't, that one is. So you got to be really careful about which one you're choosing. You got to make sure it's really clear. Whichever equity is PO3, you got to be really careful about that. Just needs a little bit of patience. This is a continuation consolidation. Let's find a working example. Okay, we already did this one. I don't know how that happens. Okay. PO3 right there. This is a low. It is associated with PO3, but there's probably something back here. Let's see. Well, maybe on ES. Let's go right here. Oh, wait, no, it's a continuation. I didn't even realize that. It did PO3 right after. See, my rules even work, and I'm not even looking for that shit. Let's see where the continuation pointer was. There was a 4-minute swept. Might have used that in the... And a 6-minute swept. Okay, there it is. 6-minute swept, probably an FFEG. Additive trim risk management move. Shit is too clean, bro. Same here. Didn't go anywhere. Took a manipulation on a high associated with the chop. Didn't go anywhere. Took a low, not associated with the chop. Didn't go anywhere. The continuations will happen after, but still. Let's go back one last example. I know this is a long video, but these are just clean oh my god, dude, this is so clean, bro. This is literally perfect mech in real time. This is so perfect, bro. This is like, look at this. 130 points free, bro. 180 points free, almost 400 points just between those two little trades there. Dude, fucking beautiful. Not to mention the long that was probably in there and the long there. Like, dude, oh my god, bro. Just sometimes this shit is just so wet. Look in here. Oh my god, another consolidation continuation. Unless there's an SMT, and then maybe not. No, literally just a consolidation continuation. Is what it is. Is what it is. Come on, give me one example. Okay, consolidation, continuation. This isn't bad. It's kind of associated with the chop a little bit, a little bit. We take the low, we did move, ended up PO3ing again. There's probably EQ range. We're going to be using EQ range as well when we're trading to help anticipate the chop and kind of do risk management on the chop. So if we turn on EQ range, as long as this is, okay, well, so we have a little bit of session to work with. We can use, I don't know if it ends at 6. Let's see. Oh shit, ends here. Boom. Let's go here. Let's see where that EQ range ends up falling. Let's check ES. Oh wait, what day was this? Oh, this might have been news. That's a crazy dump. Holy shit. That's insane. Okay, so EQ range is a little bit displaced higher than where we are in price. So this is probably either a news day or something happened this day for that to happen. We'll go to New York. One more New York. Okay, actually this is pretty solid right here. This might be a good example as long as there's a high. Maybe not. Maybe it's another continuation. Oh, it's 930 macro. Dude, I'm so out of it. Yeah, 930 macro. So that doesn't even matter. Nope. Ooh, okay, this could be good. We fail. There's not much to say about this one. This one is not bad. This one's not bad. This one is pretty good. I don't think this is that big of a deal. Let's check ES. This might be a good example. Okay, yeah. Price didn't necessarily go too far. It did, obviously, we're using the untapped FFEG to sponsor the move. We didn't go very far. Decent enough to trade, but you want to treat it just like a risk management style trade. Continuations. Like, we're not taking any highs or lows that aren't that appealing. This low, PO3 low, not going to be ideal. But in this case, with this high here, after our chop, we take this high that isn't associated with the chop, and then we have that clear displacement through the lows. So this is like probably the best example of seeing them contrasted. Here's a high not associated with the chop, no PO3 at the high, and there is PO3 at the low. Didn't really go too far. And then obviously we continue to consolidate, because imagine your exit is the same as your entry. What does it matter? What's the point of that, right? So just some basic information on PO3. No, it's a super long video. If you have any questions in the comments, leave them down below for me. Happy to answer them. I do have to get on the road, bro. It is starting to rain and I'm going to be late. So I will see you guys in the next video. I think I'm either going to talk about techniques or sizing or trims or targets or profits or some shit. Who knows? And then we got to get into scaling accounts. We got to get into all that good stuff. But like I said, if you have any questions, leave them down in the comments below. Happy to answer them. Get the indicator, join the Discord. Live trading coming back to you on May 1st. Other than that, boys, stay tuned. I will see you guys later.